there's such a fine line making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We're going to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
There are green arrows around the world after U.S. indices closed with all-time highs. Money keeps moving as investors look forward to earnings reports tomorrow from JP Morgan and Wells Fargo. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So stocks rallied on Wednesday with the Dow and the S&P ending at historic highs. And lots of people have not been expecting this kind of movement in 2013. What's kept you on the right side of things, Scott?
Well, it's been using a portfolio approach, sometimes having a lot more positions, sometimes having a few less, sometimes having more size, and really following the technicals of the market versus all the headlines. You always have to look at the headlines, but really you have to watch how the market reacts to the headlines and not obsess about the actual individual event.
At this point, what are the levels you're watching on, say, a short and intermediate basis?
Well, those have been the ones that traders have been trying to focus on. So if you look here at the chart of the spiders, we've had 3 inflection points this year where we weren't sure what would happen. Coming into the year, if you put it in line with the spiders, this is what we were looking at: 148.11, which was 1474. You had a gap to start the year showing you that money came to work. You digested above that gap, and then we broke above that September high to give you some follow-through. This is when the Italian election started to settle in. Okay, that was when the volatility lifted. You didn't know what type of correction we were going to have, but this was the new pivot. Okay, 153.30, that was the area to write down until we saw some downside where we wound up holding this intermediate trend line. From there, we regrouped, took that out. If you were short, that was a spot to cover. If you were looking to readjust, get long, maybe you got long some positions in here. Then once we took out this high, you had an additional move. Then here was Cyprus, okay, small little pullback to the 21-day. You could have gotten a little light, but then as you saw things hang in there and you saw money rotate to the food stocks, to the retail stocks all across the board, you kind of knew that it wasn't game over. And then the jobs report. That was a little scary on Friday, okay, or actually this was before that, the week of the jobs report. This was the actual day of the jobs report. We opened at 1538-ish. Okay, which is right around here. We talked about 153.5. It went to 153, I think 77, and then closing the highs. And then if the bears had any control, they would not have let the market take back this 156.20. And then yesterday, you had about 2 minutes of decision time, once we took out this 157.20 in order to cover some shorts, get some longs, and, create some extra cash flow. Now, on a micro basis, this is our point of reference right now, 158.87. Some work above this prior breakout would make sense.
But you also made macro predictions. How'd you base those?
Well, you have to take a look back. A lot of people talk about how in the last decade, if you bought 1,200 in the S&P, you probably, crossed that path 7, 8, 9 times. Okay, and I think in actually all of 2000, or from like 2001 to 2010, there was like 303% of total movement, but there wasn't any follow-through. So with that said, you go back and you look at the overall 3-decade chart, it makes a little bit more sense because you have to digest moves. And if you look back here, you go to your monthly chart, you will see, this is something I did with Jim Cramer from Mad Money, where I showed how here was your, roaring, 70s into the 80s. Okay, big time move, digested a little bit. Then you had another move. Okay, from the top of the 80s all the way to the beginning of 2000, which was a huge move. From there, if this was a stock, don't you think you'd have to do some kind of consolidation to absorb the type of move that we had? And then within this decade, it was a little different, right? You had to be a big-time market timer. You had this descending channel that a lot of people rode to the downside. Then once it changed here above 1,000, you could have been long again. You had an ascending channel that broke here to the downside. Time to take some risk off. Then boom, this was the bottom of the financial crisis. And from here, you had a low, higher low, higher low, higher low, higher low. And then we talked about that if we take out this double top, in the S&P, chances are there's no reason why we shouldn't be able to see 1700 come 2015, and that was when we were way into this area. So now we're through here, and at this point, as long as this trend stays intact, you keep riding it out. And this is for macro investors who do whatever, however they approach it, 401k, 529, you name it, they've been rewarded if they stayed the course. And then on an intermediate basis, which is our sweet spot, that's when when it's rally on, you have multiple positions. Like when IBD has us in confirmed rally, which we've been in since the start of 2013, you stay with that kind of portfolio approach. But then once we get into market correction, you lighten up, you let 6-7% of decline happen, or 3 to 5, or sometimes more, and then you reconfigure. So just know your time frame and look at the technicals and stop obsessing about every headline out there.
And at this point, we have several sectors at historic highs. We're going to check the temperature of them and see which ones are leading this rally. We know that the financials have had impressive bounces over the last few sessions, and that continued yesterday with the XLF gaining 1.3%. So maybe it's investors expecting positive things out of JP Morgan, Wells Fargo tomorrow.
Yes, and the XLF's not at historic highs, but it's at 2013 highs, and they've had a nice run. In the last year and a half, the financials have been somewhat of a backbone of this move. And then here's where we started the year. This was your pullback. Boom, 2 new highs. So at this point, financials are in line and they're doing pretty well. Some stocks in this group aren't at highs yet. So tomorrow we'll see, how JP Morgan reacts to its earnings. It just had a 4-day move, off of that Friday low. So, I'm going to think they have to be in line to positive in order to take out this high. It's not at highs, forecasting a blockbuster number. I don't think Wall Street's, forecasting any type of blockbuster numbers. I think they just want to see in line.
Now, what about utilities, which are also showing strength? The XLU made a new high at 40.17 yesterday.
Well, this group is showing you that there's an appetite for stocks that don't have to have huge growth but also give you a dividend, because no one's getting money in their savings account. So if you look at this group, look at the new highs here. It hasn't really paused whatsoever. It's actually away from its 8-day moving average. So this has been a spot where investors don't, investors have money probably tied up, but traders don't look here for explosive type moves. But this is just a stealth rally that looks still healthy and has been going to the upside.
And we talked this week about rotation in the market and money flowing into retail. This sector has really been leading the market on its way up. The RTH had a huge move yesterday, made a new high of 49.89.
Well, at least this group traders are more familiar with, because there are movers in there. We've talked about Walmart, we've talked about Target, TJ Maxx, Nike, a lot of them. And if you were looking for the relative strength, and you wanted to go with an ETF, hopefully we helped you lead you there, because retail has been something we've been talking about. You look at RTHs here, wow. Look at the size of this move to the upside. This is a huge breakout bar on top of a bull flag. So here you are during this correction. We came into the 21-day and rallied well, and then boom, nice breakout move. RTHs, great ETF to have owned. If you weren't sure what retail stocks to go with, and at this point, probably needs a little digestion.
Healthcare also looking hot. The IYH posted a nice gain of 1.7% to close at a new high yesterday. Does it still have room, you think, to the upside?
This one also not so on the radar, as far as big names to trade. But if you look here at the chart, it's at highs. There you go. At highs, nice bull flag. It did have a move. We've talked recently about, Celgene and Argen and some others that have been giving us, some nice movement. This is something that my traders have been watching. We isolated this channel and it's gone to the upside. But then on the flip side, real quick, Britt, you have some of those making new highs, if you come back to us. But some of the other groups that didn't make new highs, which is what the bears keep pointing to, that just bounced back, are real quickly the home builders, XHB, just to really look at a lower high here. So some relative weakness. You look at the transports, okay, they bounce back with this red dog reversal, but they're not at highs. And then, the Russell actually did bounce back, with some power back to this area. So, I would think that those are 3 different groups that traders would like to see hold higher and make new highs to help confirm the all-time highs in the S&P.
All right, well, coming up, we're going to go in the trenches with food and beverage stocks, follow up on names that have been acting well and look poised to move higher. But first, a quick commercial break. We're going to give you a sneak preview again of Scott's special CeeLo interview. We'll be right back.
Here we are in Las Vegas, Nevada, and I have the luxury of sitting down with CeeLo Green, the star of Liberace, a show right now that's taking Las Vegas by storm, a man who's taking the music industry by storm. How do you keep up the pace of that show and that energy all night long?
A good audience is the incentive that any artist would need.
And with all the different diet plans out there, with all the different directions you could have went. Why did you choose E-diets?
Having E-diets be a part of my regimen, you know, it's like taking a professional approach to your personal life.
Did you actually see that the Dow Jones made all-time highs in the past week or so?
No, you have to tell me about that. What happened? I'm making some extra money? What's going on?
Well, do you have people managing your money out there in the stock market?
Yeah, I do.
All right, well, that's good. I hope they have a long-term strategic approach.
CeeLo, Mortimer!
You had a message out there that you wanted to send to your fans, to people who aren't your fans, just to the world. Like, well, what's your message?
I've seen T3 live a time or two, and I was wondering to myself, is there like a message of your own in there somewhere?
We're back and following up with food and beverage stocks that look like they may be poised to make a move higher, and McDonald's is one of them. It's been grinding higher above its 8-day moving average and posted a 0.4% gain yesterday.
Yep, it looks like it's ready to make new highs again. We talked about this on the move. Take a quick look at McDonald's. There you go. Here's a chart. This was your last little move above 100. Nice little bull flag here, I think above 101.74. It can continue. This type of stock is where investors have put some money in. It looks like it's been trending, and you could probably get one more trade for cash flow. Then
there's a stock that you've been talking about for a year or two, Dunkin' Donuts. It's been consolidating its recent gains pretty well. Is it getting ready to make a new historic high, you think?
It looks like it. You know, a lot of different time frames lining up here. We get excited about new issues that have the potential to be, you know, runners for multiple years, and this has been talked about as one of them. You look at the chart here of Dunkin', you will see, you know, here's where it came public. Whoops, sorry. And you had this nice little cup formation, and then finally it broke above the IPO high, gave you a quick run to about 37. Came in, consolidated, then went again, and now if you look right here, looks pretty good. I think traders are looking at this little bull flag right here that if it does get above this little zone 39.54, there is an extra trade for cash flow. If you're a macro investor, just stay the course.
Well, talking Dunkin' Donuts, might as well talk Starbucks then, which notched nearly a 0.7% gain yesterday, looking pretty good as well. Where might next resistance be?
This one, you know, hasn't really taken off, but it's had some problems in the past year or so, but it's tight, so I think there is opportunity. We like tight patterns, and Starbucks right now is one of them. You had a really nice move right here when it broke this little downtrend. Since then, it's been consolidating very well. Moving averages caught up. It didn't participate yesterday, but I don't think that's too big of a deal. I would be in some, and if it starts getting above 58.31, that's when you can get another move for cash flow. So right now, if you take a little bit more look at the macro pattern here, you'll see it's not, you know, at multi-year highs, but it doesn't have to make money. At this point, it's been acting better, and above this little downtrend could take you back to, you know, the 60s at some point later this year.
And Chipotle had a few big up days, but looks like it may be getting a little bit tired. Do you think its uptrend is still intact?
Well, the one from the lows. This one has been one of those chosen momentum names that fell out of good graces and then started to rebuild a decent pattern. You look here at Chipotle, you'll see from the lows, if you weren't caught in that mess, you've had a decent trend here. You know, this was the low. I remember when they, I think, pre-announced right here, but what happened was it negated it real quickly. So we talk about gap downs. If a gap down is negated very quickly, it shows you that it was priced in, which that was, and then from here it's been going nice to the upside. At this point, you know, I think it's okay to stay with, but you know, there's a gap that comes into play soon. It could be resistance, so if it would make sense to pause there. So I would watch this area real close. Let it pause there, maybe build above 340, and then you get another trade to fill the leftover gap back from, you know, late last summer.
All right, let's do some quick hits here. Apple woke up yesterday, made a decent move. It closed at highs, so should it be on our radar for potential upside today?
Well, this one has been very tricky. It's been very weak. Yesterday, finally, you know, off that 419 double bottom, there was a trade, and I went with it. And I am actually long a little bit overnight, but then you had the Microsoft downgrade, which we'll get into. You know, overall, you take a look at the chart, it still has a lot to prove. This was the high that was in, back in September, and it's been in this downtrend, you know, with little bounces along the way, but really the trend has been down, and you could have made more money short than long. This was your last little, you know, 435 to 470, made some money, then failed. So, you know, the bulls are saying right now you have a potential double bottom, right? Here's 419, here's 419. You know, yesterday the reason why I nibbled on it was because it crossed above this little downtrend. It is lower this morning with some of tech being down. You know, give it the first half hour. This is a candidate to go positive and push. If this can get through yesterday's high of 437-ish, I do think maybe this is the pre-earnings run, but if all of a sudden it closes below 430, it'll frustrate just as many people as it will me today.
Well, let's get into it right now. Microsoft, Goldman Sachs downgraded the stock. Just this morning, the note came out that it was downgraded on slowing PC sales. So how much should we expect it to weigh on the stock today? It had been acting so well.
Well, it already took back all of yesterday's gains. So this is like a trader's worst nightmare. Thank goodness it happened on day 2 after a 2-day super move, so I'm sure some people took some profits. You know, if it happens on day 1, yeah, it drives traders nuts, because usually day 1, when something ignites, that's when traders get in there and look for follow through. So at least it happened on day 2, so hopefully no one's in full positions. If you look here at Microsoft, you'll see, you know, this is when it ignited above 29 and then opened up down a little bit and then went above yesterday's high, and here was your follow through. I think yesterday we drew a line into this resistance, so hopefully some traders took off some of it into there. So now today I think it's already below 29.50. I'd watch 29.38. If you're not caught in this mess, maybe there's a trade here, you know, to buy the dip, because I don't think people are trading Microsoft for growth in the PC sector. They've been buying Microsoft for some safety, and the matter of that, it hasn't done a thing in the last decade. And finally, maybe this is long enough for institutions to have been back and forth for a move because of its yield and its cheap PE, but we'll see.
I think we'll see Intel impacted by that today?
Yep, Intel's down a few percent. You go to the daily chart of Intel and you'll see, you know, you did have a nice, you know, 2-day trade. You know, my rule is on day 3, you never really initiate anyway. So here's day 1, 2, 3. You know, it's probably going to be opening down with them. So I would look, if you're not caught in this, you know, look to see if 2160, 2170 is viable for a trade. See if these stocks could come off their lows. If they can and close it at the dead bottom, then it's going to be probably back to dead money for a little while. Well,
how about Hewlett Packard, which did manage to notch a small gain yesterday? Looks like it could enter that gap from April 2nd.
Well, I'm sure some traders were kind of cheating for that. Thank goodness some of my guys have been thinking more short Hewlett than long, but they're probably not shorted either. You look here, you know, it perked up yesterday, and you did have this gap. Remember this red dog reversal? It looked as if it didn't have enough power to get in there yesterday, so this was on our radar. At this point, I think it's opening below it. You know, here's support. 2166. If we can't get back above 2166, you could see a lower move down to, you know, the 50-day. And I do think that I've been talking about how the slowdown in the PC sector, you know, and no reason why this had such a big run. Unfortunately, I'm not shorted. I've been just avoiding it ever since, you know, we tried it here and it just took it out. You know, now it'll be interesting to see how it deals with this pivot.
All right. So in summation, what will you be focusing on in trading today?
Well, you know, after you make all-time highs, especially, you know, coming off Friday's lows, so it's been 4 days, huge travel range. I think a lot of guys tried to even be short yesterday, and the pain trade probably either got them taken out in stretches yesterday or they're still rolling it up. I think the indices could go back and forth, maybe be down 4 to 6 handles or more and digest. As long as we hold above that 1573, I think this last breakout will stay intact. But when the indices digest, that's when you get to see relative strength, relative weakness, and that's when you get to, you know, trade individual names for cash flow. You know, I want to see what goes on with these, you know, mega cap stocks to see if they can come off the lows. I'd like to see if Apple and Google maybe get a second day, you know, because those second days have been hard to find. And I think everyone's trying to just stay with the rally, hold multiple positions, not be too, you know, out there, because there's no really tight patterns to sink your teeth into things. That's what we like. We like tight patterns that go. And after 4 up days in a row, there's really not that many A plays to initiate new trades, so we need to wait for setups to come.
All right, pick those spots carefully, guys. Happy trading. Have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.